Tech stocks have been underperforming global markets in the last 6 to 12 months, and Apple is in amongst the worst, with the company suffering with its production in China and also concerns about higher inflation. Let's take a look at the share price chart. Yesterday, significantly, the stock went below this red dotted line, which was the point at which it's a $2 trillion market cap company. Now, this plunge means that there are no longer any companies left in the world worth more than $2 trillion after Microsoft and Saudi Arabian oil giant Saudi Aramco pulled back late last year. Now, we have got a rise on the trading day today, and technically we are back up above that $2 trillion market valuation. But clearly the downtrend is in place. This is just a little bit of an uplift in the stock. I think it's important for the company to start to headline what's going to happen this year. But there are a lot of unknowns. How high will interest rates go? That is a big headwind for tech stocks generally, and for Apple in particular, and also what's happening in China. A lot of volatility expected around China in the next few weeks or so as more and more people contract COVID. If you believe some of the external numbers that we're seeing in China, there are enormous numbers of people now with COVID and enormous numbers of people in hospitals. And tragically, there are, as a consequence, a lot of people dying. Now, the big problem is for China is what then happens after that. And what does the Chinese authorities, or what do the Chinese authorities do in trying to restore some sort of confidence? But at the moment, at least, Apple is on the way up today, all sessions on the IG platform. But this is not anywhere near as good enough a lift we're going to see. And I suspect we could well see some new lower lows coming through from Apple in the next few weeks.